So my name is Belugina. I'm the head of analytical department at MBS, and I'm very happy to be with you today to discuss the secrets of Ichimoku indicator. This is a wonderful technical tool. Please give me some signs in the chat whether you are familiar with this tool and what is actually your experience, so that I adjust my presentation according to your answers. This presentation anyway has some basics of the indicator because, well, even if you heard the name Ichimoku, you probably may not know the details. And besides the basics, there are some specific things, some guidelines for building trading strategies using Ichimoku indicator and for trading with this indicator itself. So please give me some signs of your level of acquaintance with this indicator. Thank you for your comments. We have different answers, so we will have a look at the basics anyway. So Ichimoku Kinko Hayo, it is the full name of the indicator. It is a Japanese name because the indicator was invented by Japanese journalist and analyst Goichi Hosoda. And this journalist has suggested this indicator a long time ago in 1936, and the indicator became widely used since the years of 1960s. So you can see that traders use this indicator for a long time now, and they keep using it. The main reason is that they find it good, they find it useful. So in my opinion, the Ichimoku indicator has proven its merits to the market and to the traders already. It is quite popular in stock commodity markets. Traders use it a lot. And, well, forex market as well. So the indicator is Japanese, and if we look at the translation of this phrase, Ichimoku Kinko Hayo, I don't know whether I pronounce it correctly or not. I hope that I do it okay. It means one glance at the equilibrium chart. Ichimoku stands for one glance, and the idea is that if you have applied the Ichimoku indicator to your chart, you open this chart, you have one glance at this chart, and voila, you have an idea, and a pretty good idea, of what is going on at the market. I would like to stress, to emphasize that Ichimoku not only gives us the general picture of what is going on at the market, but it also provides trading signals. So we have here two important things which this indicator gives us. So we have Japanese candles in our trading terminal, so why shouldn't we have Japanese indicator? Here it is. Let's find out how to use it. The indicator consists of several elements. Here we have all of these elements listed in the table, and we will discuss all the elements, how to use them, what they mean, when we look at the live chart of some currency pair. But just for your convenience, I have this data here. Pay attention to the upper line of the table. In this line, we have the terms in Japanese. They are pretty often used in analytics. So if you want to read some analytics on the Ichimoku, you probably need to be acquainted with these terms. Then I have translation of these terms, and then images and some description of what these elements represent. We will start, I think, with the main element, the Ichimoku cloud itself. Let's let's have a look at the chart. For example, well, euro dollar, why not? And to apply the indicator to this chart in MT4, you choose Insert, Indicators, and then Custom, and here it is, Ichimoku. And as this indicator is very, very visual, it is probably the most easy for those who have a great visual perception. When you add this indicator to your chart, don't be afraid to work with these colors to change them for the picture would be more informative for you. For now, we apply as it is by default. And here we have something appear. I think I'll delete moving averages for them not to distract us. So here are all these elements which I have in the table. And well, I think we'll make the cloud a bit brighter because it's just not easily seen this way. Well, now it is better. So here we have the elements. And you notice that these elements are kind of spread by the chart. Firstly, we have the Ichimoku cloud. The cloud consists of two lines. The line which is lighter in color, in my case it is orange. The line which is darker, in this case it is violet, and the space between these lines is the cloud itself. The lines are called Senko span A and Senko span B. These are moving averages with periods, as far as I remember, like 20, 26, and 9 in the basic settings of the indicator. The most important thing is that the lighter line has a smaller time period, the moving average with smaller period. The darker line is a moving average with bigger period. These lines are moved forwards by by some periods of time. Here. Next lines are red line and blue line, and they are basically much the same as the first lines, Senko span A and B. These lines, the red one is the short-term moving average. In the basic settings, it has 9 periods. The blue line is a longer-term moving average. In the basic settings, it has 26 periods. So if you worked with moving averages, you know that if the moving average with smaller time period is above the moving average with bigger period, then we are in the bullish market. This red line is called Tenkan-sen in Japanese, or if we speak about the English word, it is the turning line here. And the blue line is called Kijun-sen, or the baseline. And the final line here, the green line, is called Chinko span. Here it is, or the lagging line. It is simply the current price chart. It's closing price of each period, which has been moved 26 periods back. So just the price chart, which has been switched back. So you can see how we have 3 different time periods here. We have the future, the so-called future in form of the Ichimoku cloud. We have the present in form of these 2 lines, the turning line and the baseline. And we have the so-called past, which is reflected by this green lagging line. So free periods. And this is easier to think about this chart when we separate these lines in different periods. It is just easy for the analysis. You can see that these lines are quite similar in their dynamics because, well, all of these lines represent moving averages except of the green line, but it is the price itself. So clearly these lines follow the price. But the merits of the indicator is that they are adjusted in different ways. They are either put forwards or put backwards, and this allows us to get the picture of the market and to get trade signals. So sometimes you may focus on some elements, not the other. Sometimes you just use every element of the cloud. That may depend. So the basics is that when the short-term moving average is above the longer-term moving average, the cloud is positive or bullish, and you can see that it is painted in lighter color. So here the situation is the opposite. We can see that the longer-term moving average is above the shorter-term moving average, and the cloud is painted in darker color. When we are talking about the current Ichimoku cloud, we are certainly referring to the piece of the cloud which is ahead of the price. So to have an impression of the current market, we look at this piece of the cloud. We see that it is light, that it is bullish. It is a sign that bulls prevail at this market. And this is our first hint of what is happening. Next, we have a look at the lines we have in the present section, and red line above the blue line and the price chart above the red line is the confirmation of an uptrend. And when the price begins to intersect these lines, we can see that the uptrend becomes not that strong. Some corrections took place, and these lines act as support and resistance and as the targets for correction. Next thing, we have the green line, which is more or less in the past. And the logic of it is that we kind of make the current price get on the price we had in the past. And if this green line breaks through the price chart, or it recoils from the price chart, it also gives us information. It gives us some signals. So these are basically the lines. We will return to the chart. I want you to have a look at the formulas. Not necessary to get deep into this. The main idea you need to grasp looking at this slide is that there are 3 periods of time which are used in the Ichimoku indicator. So we have here letters time 1, time 2, time 3. These time periods are in certain places in these formulas. And if we look at the settings of the Ichimoku indicator, you can look at the settings by right-clicking the indicator properties here. And if you look at the inputs, by default, you have these readings: 9 for Tenkan-sen, 26 for Kijun-sen, and 52 as the biggest period, Senko span B. These are things which are here by default, and actually these settings were introduced by the founder of the indicator itself. Yes, these classical settings are proposed by Goichi Hosoda, and well, it is from 1936 when he invented the indicator. This is what he has introduced. If you wonder why he picked these numbers, there is actually an explanation. During that period of time, 9 was the length of 1.5 working week in Japan. So it was 6 working days a week, and plus 3 days, it was 1 working week and a half. 26 was the number of working days in a month, and 52 clearly 2 months of working days. This is how Goichi Hosoda just tied his indicator to the market environment. So these are the settings. But when you use Ichimoku indicator, yeah, it's now we have a 5-day work week, but apparently during 1940s in Japan, there were 6 days a week during which people officially worked. So we can use these default settings, but we can also adjust these settings. We can change as we see fit. But the important thing, if you want to adjust the indicator and introduce your own parameters, you need to make it stick to this ratio between time periods. So T1 should be smaller than T2 and smaller than the third time period. The third time period in this formula should be the biggest. So you need to keep this relation in mind. Here I just have once again this future, present, past thing, and well, we move to the usage of the indicator. One of the aspects for which we can use the indicator is to identify a trend. If we see that the price is above the cloud, and it is completely above the cloud, like in this picture on the left, and then goes blue line, then red line, the price itself, and somewhere higher is the green lagging line, then it is a trend, and in this case an uptrend. If the price is completely moving below the cloud, this is a downtrend. If we have the situation, then all lines are kind of mixed up, and the cloud is inside the price range, like in the picture on the right, well, it is range trading. Ichimoku can be used in this range trading as well, but maybe more merits for trend trading here. But it can be used in both cases, and well, from the first glance, it is easier to identify trend with these instruments as well. If we have a trend situation, then the elements of the Ichimoku cloud act as support or resistance levels, and the cloud itself is very often a great support and resistance. It is a kind of very visual thing. Having it at the chart is sometimes very important, and you can easily see that a price is going to meet a serious obstacle, especially if we use the indicator at senior time frames. Things to watch. Just I try to get the most important things here. When we analyze Ichimoku chart, we compare the current price and the cloud, whether it is above, below, or inside the cloud. We compare Tenkan and Kinjun lines between themselves. These are, once again, red and blue lines between themselves and in relation to the cloud. And we look at the color of the cloud. So 3 groups of things, main things. We'll have a look at praxis. Some signals here as well, but I think we will discuss them looking at the chart because it is not easy to compare the text. Maybe you will make a print screen of this slide if you see it useful to have all signals in one place. And time frames, yes, I see the questions about this. Time frames certainly is an important thing. Here are some thoughts on time frames in Ichimoku. So you can see that we discussed the logic of the parameters and settings of the indicator, and as the founder of the indicator counted the number of days in a week and so on, it is quite logically that we have he introduced the parameters 9, 26, 52. We have 52 weeks in a year, and the most logical thing is to use this default set of parameters for the weekly chart. Many analysts think that these parameters are related to the weekly chart better, and I tend to agree with them. So here you can see that there are several periods of trading. If we have the largest time horizons, months and so on, we can have a look at the weekly time frame. At this time frame, the so-called duration or the size of the Ichimoku cloud is about 6 months, and the possible Ichimoku settings are default 9, 26, 52. If we are talking about medium-term analysis and the daily chart, the duration of the cloud is about a month, and here we have potential settings of the cloud 8, 22, 42. These settings are adjusted to the modern work week of 5 days. So following the logic of the creator of the indicator, we adjust this to our common environment we have now. For short-term period, for hourly time frame, when the cloud lasts for about 3 days, well, this is what is proposed, 9, 24, 48. We have 24 hours in a day, and 48 is double of that. This is why such settings are proposed. And here, a bit below the table, I have the proposed settings for the 4-hour chart as well. So you can see that there are different settings. Of course, you can use default settings in all of these situations, and this is possible as well. We can see in the charts when we change the settings how the picture changes. It changes, and your analysis, of course, will be a bit different. Why change these parameters? Well, the answer is because when we place the specific parameters for each time frame, the indicator becomes more sensitive to changes at the markets, and the signals tend to be more precise. If you are just looking at the Ichimoku indicator to get the general picture and just some hints, if you don't open your trade on the indicator, well, maybe in this case you don't need to make all these adjustments, you can just use default. But if you are an active trader, then I suggest you test these settings on each time frame. If we are speaking about which time frame is the best for using Ichimoku indicator, Well, I would name here several time frames. I would name 4-hour charts, I would name daily, and I would name weekly as well. Probably most traders won't use weekly for active trading, but it is always good to have an idea of what is happening in the market. And sometimes when we track the Ichimoku cloud on the weekly chart, when we get some strong signals there from the Ichimoku chart, is just a good confirmation of some big changes in the market and some big trends. In addition, it is wise to have a look at the Ichimoku indicator on different time frames for one trade, because, well, multi-time frame analysis is always best. It always gives us some filters to filter out some bad signals. And if you have a signal, for example, using the Ichimoku indicator on 4-hour chart, check that you have the setup. For example, if you have a sell signal on 4-hour chart, check that there is a bearish picture on the daily and weekly chart. In this case, your trade would certainly be of highest probability of success. And here at the bottom, I have mentioned some other settings for 1-hour and 4-hour chart, and as well for very small time frames from one member of our analytical team who specializes in this Ichimoku indicator. She gives her signals on the basis of these settings, and maybe some of you find this information useful as well. Of course, to start working with Ichimoku, I suggest to start working with some classical or these adjusted settings. So in my trading, I usually use Ichimoku on the daily chart, holding position for several days. I find it works rather well. And just another general thought, as there are so many elements in the Ichimoku indicator, these elements create a kind of trading system themselves. So, of course, you can use some things to determine your entry and exit levels, but all in all, Ichimoku indicator is a kind of ready trading system itself. What settings on the daily chart? Here you can see it is in the third column. You can either use 8, 22, 42, or you can use the classic 9, 26, 52. Let's have a look at the chart because, well, it is not all theory. It should be kind of practice as well. So we have euro dollar. What does the Ichimoku indicator tell us here? What are the signals? Well, first signal is the color of the Ichimoku cloud. The first thing we need to watch. Clearly, the current color is bullish, and draw your attention to the times when the Ichimoku cloud changes color from bearish to bullish, and the reverse situation. It is one of the signals we have in the table with signals. So changed color, well, it may be a good sign. But of course, we know that during the times of flat market, of some sideways movement, the cloud changes color, and it doesn't mean that we have a big trend. When we have sideways movement, the cloud is usually more or less thin, but when we have a trend, one side of the market, bulls or the bears, tend to make the cloud bigger in size. And the bigger size of the current cloud, the bigger is the power of bulls or bears, whatever the cloud is that. Next thing, this aligns the turning line and the baseline. If the red line goes above the blue line, this is the so-called golden cross. So the short-term line goes above the long-term line, bullish signal. And here it is kind of important where this intersection of the lines took place. If the bullish signal, the bullish crossing, appeared below the Ichimoku cloud, well, this is considered to be a weaker signal. It doesn't mean that this signal won't produce an uptrend following it. Look here, the kind of weak signal resulted in an uptrend. But when you make your trading decision, you probably would want to have a look at some other factors. If this bullish crossing appeared above the Ichimoku cloud, it means that the uptrend is strong and probably will see the price move fast to the upside. Next thing, we can have a look at the green line, and here we can see that it crossed the price chart from the bottom to the upside. And it's very important that during this crossing, the green line should come through the body of the candle. So not just somewhere at the candle's shadow, it should pierce the candle's body. The break of this green line is also a signal here. So I told you that these lines act as supporters and resistance. The cloud acts as support and resistance, and the red and blue line do this function as well. Currently, we see that on the weekly chart, euro-dollar went below this first support of red line, Tenkan-sen, and this line is acting as resistance. Now, of course, we have this blue line in focus for the correction to the downside. The cloud is still bullish here, and it will remain bullish for some time. It means that the general trend is to the upside, but corrections within the space between the current state of the price and the blue line are possible. If we have the intersection of the price and the blue line is a longer term moving average, and if the price goes below this point, it would probably signal the reversal of the general bullish bias here. Let's look at the daily chart. Maybe we have some more illustrations of some other cases. Here we see that the price went inside the Ichimoku cloud and currently stays inside the cloud. You can see that the lines act as resistance once they acted as support. In the previous month, in September, the blue line acted as support. Then the price went lower and decline below the blue line is an important signal. You can see that surely the price pierces and intersects with the red line more often because the red line has a smaller time period, and surely there are more intersections. So I don't usually use the intersections with the red line for trading. I watch the blue line. Here the prices went below the blue line, and at the same time the red line went below the blue line. So a weak golden cross the decline below the blue line, and just about the same time, the Ichimoku cloud changed its color to the negative one. This is why we saw this kind of decline here. You can see that for now the price still is not below the cloud. And the cloud itself on the daily chart, we can see that it is not widening to the downside. The lines are almost horizontal. So it is a sign that we still don't have a substantial downtrend. The downtrend is diagnosed at the chart when we have the price below the cloud. Now we are not below the cloud, so the general outlook is neutral. We are inside the cloud, and all lines of the indicator are horizontal. Horizontal moving averages point at sideways trend. What actually is here with euro dollar on the daily chart? We will certainly watch the lower border of the Ichimoku cloud. A break of this level and a close of the candle will be a good signal. You can see how there are many hints from the Ichimoku indicator, and here I think that these signals are for different type of traders. So if you are a less conservative trader, you will see probably the intersection of the red and the blue line, and you maybe some other hint, you make your trade. In this case, if this intersection, the negative signal, like here, is above the cloud, so it is natural to use the cloud itself as the target, because, well, we don't know whether the price will go immediately below the cloud. Usually it doesn't happen this way. The cloud usually acts as an obstacle. So we kind of put here our target. If traders are more conservative, they wait for more confirmation. They make sure that this green line also produced some signal that it went below the price chart, and you can see that at this point I'll mark it with vertical lines. So when we had the signal here, the green line still didn't intersect the price chart. So conservative traders probably wouldn't have entered the market at this point if they waited for all indicators of all elements of the Ichimoku chart to line up here. Basically, if we have the price enter the cloud, we need to make sure that it is not a false movement. Better to wait for the candle to close inside the cloud. And as I mentioned, that Ichimoku analysis is very visual. So you need not only to look for some things and see that, oh, the price went inside the cloud, tick, I make my trade. Very often it depends on how the price went inside the cloud. If you see that it touched only the edge of the cloud, then it is not probably a break. The price may just get a bit inside it, but then get support from the cloud and return to its bullish movement, for example. If we see that the break inside the cloud, there is a clear enter of the price, it looks visually good, then perhaps the odds are that we will visit the opposite side of the cloud. Once again, this will act as support or resistance. Another important thing, a good thing to use together with Ichimoku analysis is certainly price action. Price patterns of Japanese candles are often very, very handy. Because, well, these are two Japanese elements, they are work very good together. So we'll try to see more examples here. The question, how do you plot support and resistance from the cloud when it is forwards? Just like here, for example, we see that the price entered the cloud. Upper border, it is already painted. Here, it will act as resistance. So if we use the Ichimoku cloud for support and resistance, we don't look at this future piece of the chart, we use at the current chart. So what is directly above and below the price. And of course, we see here, for example, that the price approaches the cloud. So it acts as support. Let's look at the 4-hour chart of the euro dollar. What do we have here? Here, as we are for the second week in a kind of sideways move, it is natural that we will see the cloud somewhere between the swings of the price, and Tenkan-sen and Kijun-sen have these swings, these intersections here as well. So basically, usually what happens during sideways market is that the blue line is somewhere in the middle and the red line is swinging around this blue line. So in trading, of course, more information can be get from higher time frames. Just to confirm some signals here. Let's have a look at some other currency pairs. Many traders tend to use Ichimoku techniques analyzing the currency pairs which include Japanese yen. Just thinking that this will be good for the analysis of the pair, and I quickly make the cloud more visible here. Here it is, Japanese yen weekly chart, for example. Yeah, I quite like actually how it works with Japanese yen, and I can't tell you 100% that it is better, but well, I think it is really, really good with Japanese yen. You can see on the weekly chart that we have a substantial bullish Ichimoku cloud appear, and the weekly chart there was a strong break outside of the cloud, and here the lines are in a kind of bullish order on the weekly chart. On the daily chart, well, we have picture like this. The price has a bullish bias. It moves slowly to the upside. These clouds, as you may notice on the daily chart, are really small, so we don't have a prolonged cloud here. We don't have a very strong bullish trend here. These movements to the upside are just short term, and then they are changed by the periods of correction. So bullish and bearish clouds here on the daily chart are more or less equal in their size. And currently we have the situation, then we have the the blue line above the red line here. So the blue line above the red is a kind of bearish thing here. So need to be attentive if pursuing this movement to the upside. If we have in the situation then the price is above the daily cloud, if we have the red line go above the blue line, this will be a good time to enter new bullish position here. And I wanted to have a look how the chart changes, then we adjust the parameters. So for the daily chart, we have this recommendation of 822.42. So let's have a look. 822.42, right? Yeah. You can see that there wasn't a big change this time here, but there was some change. I had a look at these changes at the euro-dollar chart actually, and it may be a bit more interesting. So daily chart of the euro-dollar, we put 8, 22 and 42. So remember how it looks now. You can see here a change. So here, when we put these recommended parameters, we actually see that with these settings, the price has already breached the Ichimoku cloud to the downside. It went above to test this cloud once again, and then there was a big rejection from this cloud. Actually, this was reinforced by the bearish engulfing pattern here just below the cloud. So in this case, we can say that here the bearish situation, the bearish setup looks stronger, and here the cloud itself looks to be widening more. We have one line horizontal, and the second line of the cloud is having a bearish bias. So here we have the bearish setup. Trade if Chinko breaks the cloud? Yes, certainly. And you need to understand that here there is just well, general logic of the things here. So what we can get from price action, that this does resemble like the head and shoulders pattern, which is currently forming. And well, this head and shoulders provides us some level, some neckline located around 1.1670. And in most cases, the Ichimoku cloud can give us some early confirmation, some early signal that it will be this negative pattern. At this point in time, we can see that the blue line is above the red line. This is a negative setup, but it came really, really close to the red line here at this moment. So if the red line gathers strength and returns above the blue line, it may mean that the pair has decided to spend more time trading sideways. The break is not coming. If the red line takes a deeper swing to the downside and the blue line follows it, but it will be slower than the fast red line, then we'll get the confirmation of the negative setup. So what I wanted to say is that certainly here, if we do the current analysis, we see a lot of levels provided for us by the Ichimoku indicator. We see that the price has an obstacle here around 1.1870. We see that currently we are below the cloud and we are looking to these lines for some negative signs on the daily chart. On the 4-hour chart, we still have a sideways dynamics. We see that here the price has the protection of the moving average. And just to be better, I will apply the sayings for the 4-hour chart, 9:30:60, 9:30:60. Yeah, the picture bit changed. The cloud here is negative. The price is below the cloud, but it has some support, some last support of this line at 1.1750. So in this case, decline below this line. I think this will be a good signal, a bearish signal here, as we have negative setup, negative intersection, price below the cloud. It will be a negative signal, and once we get the price go down below 1.1750, the picture will a bit change. Here on the daily chart, we'll see more prominent bearish signal here, and the situation will then adjust at the weekly chart, and so on. So of course, if you track the situation on the weekly chart, you are able to monitor these bigger trends, and well, it also helps. You can see how here the red line acts as a support and makes us sure that we have a bullish trend here, and just it is an incentive for us to have only bullish trades in mind. And here as well, of course, this the start of the bullish trend, it was not only the Ichimoku, it was also confirmed by this triple bottom. So what I would like to emphasize is that on the one hand, Ichimoku just gives us this visual picture. When you get used to these lines, clouds, it is a good framework to work and to see the market. Next, it gives us signals in form of the intersections, in form of the price in relation to the lines, and some confirmations which may be drawn from the lagging line as well. Of course, it is good when you see, when you arrive to the chart and see some movements, some big changes in the market just as they occur. So somewhere when you just see the cloud is starting to change direction, when the lines just intersect and so on. But it doesn't happen all the time. Sometimes you are already in some trend. Sometimes we are in the sideways market. But if you, in the first place, distinguish between sideways trade and some trend trading, if you distinguish between the phases of the trend itself, well, you can use all these hints from Ichimoku. Let's just have a quick look at some, for example, at Euro-Japanese yen currency pair. We'll quickly apply the indicator with basic settings. Here, positive picture on the weekly chart. We have here a trend, bullish trend. On the daily chart, bullish trend as well, and if the red line goes above the blue line once again, it will be a signal, although probably it won't, given the fact that there is some divergence in oscillators. Well, we do such kind of analysis, and once again return to the euro dollar. I have forgotten to point out here the monthly chart. So sometimes it is worth having a glance, and a glance at the monthly chart at the Ichimoku cloud. Here, the heavy bearish Ichimoku cloud in the monthly chart will just give you an answer why the advance of euro dollar has stalled at this point. The cloud, I think, has relation to this phenomenon as well. Not only pairs with Japanese yen, of course, maybe we can have a glance at pound dollar. I have a lot of lines here, just delete this stuff. And what can be said here? Firstly, the week chart. There was a close above the chart here on the weekly chart, but then the price returned back to the cloud. It's trading inside the cloud now. Lines act as important levels. Monthly chart here, well, monthly is a support and a resistance at 1.3820. And daily chart points here the picture that we are below the red line, below Tenkan-sen. Negative picture in the short term, but cloud still gives some support to the pound. If we get below the cloud, then certainly a bigger sell-off will follow. Here we can see that the bullish cloud is not wide. Actually, it is has become rather narrow, and the green line is now below the current price. So here we have a kind of very negative setup, which is one step from bigger sell-off. Let me get to the questions for me to answer things I haven't answered. A question about some indicators together with Ichimoku. Well, I use some oscillators as well, because oscillators, I think, give some additional information which is not given by the Ichimoku indicator. So oscillators, at least one, can contribute to the picture. It won't be unnecessary, I would say it like that. What else do we hear? Dollar yen daily. Did we look at this chart? I think we should have dollar yen. Let's quickly make this glance to dollar yen. Just a second. Somehow some unnecessary levels appeared here. Don't need them. So Insert indicators, custom Ichimoku. Here we are. So on the daily chart, we have bullish setup here for dollar yen, and well, certainly I have remembered one thing I forgot to mention when I was looking at this chart, is that like with every moving average, when the price gets far from the moving averages, it tends to return back to it. So when we have the situation like this, here we have a good trend, the lines are going to the upside. We see that the price gets far away from the cloud. From the visual analysis, such big diversion as here would mean that sooner or later the price will have to return to the cloud. It always happens. So please pay attention to this situation. It is clear that at the places like here, when we are very far from the cloud, it is more risky to open a long position. Same thing if we monitor the space between the green line and the price chart. If this space, the distance gets very big, then it is a sign that the movement in the opposite direction will come soon. And the weekly Ichimoku chart here for dollar yen shows us that the cloud is really thin, and it makes us think that for now this movement to the upside in dollar yen lacks bullish momentum. The bulls at the current state, the current size of the Ichimoku cloud is not big, so the bulls don't look very powerful. They are certainly in control at this market, and the support provided by the Ichimoku cloud currently at the levels of 111 looks very strong. The cloud is thick here, and this support will be very good for dollar yen. So it is kind of protected from decline, but currently from these charts, both daily and weekly, we currently don't see a lot of bullish drivers here. On the daily chart, red and blue lines, they are now close to the price. This will be the kind of borders below these lines. A deeper correction to the cloud will start. Above these lines, if we return to these lines and bounce back, then a new swing to the upside maybe, but looking at the weekly chart, I seriously doubt that any bullish swing will be very big. So thank you for your attention. Thank you for your questions and comments to the chart. I hope that the information was useful, that you will use this indicator to filter out the good signals of your trading system, or for the trading signals themselves. It is for you to decide. Just be aware that this tool has a lot of application in the market. Don't be afraid of these complicated Japanese terms. This is it. And surely good luck to everybody, profitable trades, and see you next time at FX Street webinars.